Today, we're going to talk about in the beginning. The Bible begins with those famous words, in the beginning. And in our practice, helping people create safe, secure retirement plans, there's a starting point. And I think as you'll see today, the starting point is starting by defining what is financial security. The challenge we face is that in the last 125 years, life expectancy has truly blossomed or mushroomed. If we go back hundreds of years or thousands of years, the average life expectancy of humans through most of human existence was around 30 years. In fact, if you go back to 1900, the average life expectancy was 33 years. But since that time, with medical breakthroughs and improvements, life expectancy is more than doubled. Today, if you're born, your average life expectancy is 78. But if you get good medical care, it's going to be much longer than that. And so longevity, which is wonderful, is both a blessing, but it also creates a challenge. Living longer means our savings must last longer and avoid a gauntlet of risks. So today's topics, we're going to start out by trying to define what is financial security to you and to me. We're going to talk about how we go about creating a lifestyle, a standard of living. We'll talk about various ways to fund a lifestyle. And then finally, we'll end up with your questions. So let's start out by trying to define the term financial security. And I ask everybody that's listening, what's your definition of financial security? Over the years, we've talked to a lot of different prospects and clients, and they've shared with us different perspectives on financial security. One of the ones I like, pay off your mortgage. That seems to be a pretty strong milestone for most folks. The day they pay off their mortgage, they have just created additional income in retirement. If your mortgage payment monthly is, let's say, $3,000, and let's say the principal and the interest is $2,000, and your escrow account paying off property taxes and insurance is another $1,000. The day you pay off your mortgage, you just gave yourself a $2,000 monthly raise because you no longer have to pay off and service the debt. So eliminating debt in retirement, that's a very positive step. Another goal that many people have told us, well, Bill, we want to have 1 million in savings to be able to safely navigate the challenges and the length of retirement. And that's a worthy goal to have a financial milestone. But the challenge with it is many of us don't achieve that large of a sum of money. And even those that do, while $1 million may seem like a lot of money, if you experience an extended period of long-term care near the end of your life, as my parents did, my mom and dad, Pop was a very successful businessman. They had probably $2 million in investable savings when he retired. At age 82, my mom had a stroke, made it 14 years, paralyzed. She was perky, but paralyzed in a wheelchair. A year after mom had her stroke, Pop came down with Alzheimer's. He made it 9 years. Most of their care was rendered in a facility setting. And after 14 years, what we divvied up of the 2 million was only 600,000. So it is possible to go through over $1 million in savings, depending on the risks that you're encountering. Here's one that I like, and I think this is one that most people can relate to. What if I have enough money where I can live off the interest on my savings? Let's say I'm getting 3 or 4% interest at the bank in my CDs and never touch the principal. I think that's a great goal. If we could get to that level of financial security where we're just living off interest and never touching the principal. But often we find when we're doing financial modeling for our clients that their lifestyle expenses exceed their income. Maybe they're just drawing in Social Security. And when you start factoring in how much interest do I need to live just off the interest and not touch principal, oftentimes the amount I've got to have saved up is more than what our clients have saved. So they look for other options. Our definition of financial security is really based on planning, because if you have a plan that supports your lifestyle expenses and is designed to avoid risks, that can give you financial security or peace of mind. So let's talk about lifestyles. And this is an interesting question. When do we create our lifestyle or the standard of living we're trying to support in retirement? And the answer is most of us do it while we're working and we're earning income. So we go to work, we bring home a paycheck, and while we're working, we're living pretty much focusing on the now. Do I have enough money this year to take a vacation? Do I have enough money to make an improvement on my home? Do I have enough money to cover my son's sports equipment or a set of braces on his teeth? So we're focusing on the now. Because we're working and earning income, we have a sense of peace of mind. But during this process, most of us start eventually thinking about what's life going to be like when we're not working? What will life be like after we've retired? And so we create a lifestyle, a standard of living while we're working, and we have the safety and security of regular income coming in. Oftentimes, when we move into retirement, the only source of guaranteed income is Social Security. And if that doesn't exceed our expenses, we're usually in a spend down mode. So in our world, income is kind of the equivalent of peace of mind. Just like when you're working and you have a paycheck coming in and you can pay the bills and live the lifestyle you want, what happens when we move into retirement? Oftentimes we don't have that same level of financial security. So let's talk about how we go about funding our lifestyle. And in working with over 2,000 families on retirement accounts and retirement planning, we kind of look at four different sources of income and assets to support our retirement lifestyle. And let's start out. Most of us will get Social Security. This is an important source of income in retirement. Most people have one of two other major assets, either retirement accounts, think IRAs, 401ks, 403bs, 457 plans. This is money we've accumulated tax-free while we're working. And when we leave employment, usually our employer hands us the bucket of money and says, good luck, Godspeed, hope that gets you home. Another major asset that most of us have built up is home equity. If you live in Central Texas, housing values have skyrocketed in the last 10, 15 years. And so many people have substantial home equity that can be the basis of a retirement lifestyle. And then the fourth quadrant is ways of creating additional income. And we'll talk about each one of these. First, let's talk about Social Security. And, some people dismiss this. Well, it's just some income I'm going to get once I retire. But Social Security is a source of income that's indexed for annual inflation. So it's designed to try to keep up with the rising cost of living. And, over the last 4 or 5 years, we've seen substantial inflation in this country. The Federal Reserve is still trying to get inflation down to 2%. It's not there yet. It's running around 3%, but it's much better than it was 2 years or 3 years ago when it was running 9%. So in our world, the first place to start in building a safe, secure retirement is looking at Social Security. And that begins by understanding claiming and timing options. If you're married, you have 3 different benefits you can claim against. And the timing of your choice on when to start Social Security is critical in that claiming early starts you at a lower payout, and it'll stay lower the rest of your life. Delaying can maximize lifetime payout. And our goal when we start building a safe, secure retirement plan is to maximize lifetime payout from Social Security. We're going to do a webinar dedicated just to maximizing Social Security in several weeks. You'll see that this is an important building block of creating financial security in retirement. The second block that most of us are going to rely on are retirement accounts. And these are usually pre-tax accounts that we've created while we are working. And when we turn 73, the government says, Bill, you've had enough tax deferral. Now you have to start taking required minimum distributions. And for many of us, this is another source of income. And there's a choice many people have on how they're going to satisfy the required minimum distributions. It's not optional. You have to take the money out and pay tax. And some people dip. They figure out how much they have to take out, and they take that amount out. And what you'll see with required minimum distributions are that the percentage you have to take out increases annually as we get older. And so there's different ways to satisfy the RMD amount. Most people do dipping. We offer some different income options to satisfy it. And the goal there is trying to maximize what we're going to get from retirement accounts. And we have two strategies that we work with our clients on that show them how to convert IRA 401k dollars that are pre-tax into eventually after-tax, tax-free Roth income. And we're going to do a webinar strictly on retirement accounts in the future, talking about these two strategies. How do you not only take the appropriate amount out, but how does taking money out eventually convert the funds from taxable to tax-free? And that's an important element, because when you get tax-free income in retirement, you don't have to give any of it to Uncle Sam. You get to keep all of it. That's a big plus. The third block is home equity. And most of us have built up a substantial equity in our homes. If you own a home in Central Texas, you're sitting on a pile of money in your home. But some people are house rich, but maybe savings poor. They have built up the substantial equity in their house, but their cost of living during the years caused them not to build up a substantial savings account or retirement account. So for those folks, the home can be a very powerful tool to support a safe, secure retirement. And we're going to do a webinar on home equity and how to tap it tax-free to support and maintain the lifestyle that you want in retirement. And the fourth box is additional income. Some people have pensions, not many. My wife is a retired teacher. She has a pension from TRS. I'm still working. I'm 77 years old, still working, bringing in income. That's a source of income to support my lifestyle. People have CDs that are generating interest. And fortunately, rates are higher than they were 4 or 5 years ago when the CDs were only paying 1% or 1.5%. Now most of them are paying 3 or 4. That's a better rate of return. Some people, my ex-father-in-law, not ex, deceased father-in-law, he loved dividend-paying stocks. And so he was a big proponent of dividend-paying stocks. Many of our clients have rental properties. And rental properties can generate a stream of retirement income that can help support your lifestyle. And finally, there are products, annuities, where you can create your own personal pension. You can take a portion of your savings and convert it into an income stream to create guaranteed income in retirement. And the word in that phrase, create guaranteed income, the key word is guaranteed. Because if I'm working, but I stop working, well, then the income stops. If the Federal Reserve drops interest rates, the CDs that I'm invested in, the interest can drop accordingly. Dividend-paying stocks, they can stop paying dividends if the company can't afford to maintain the dividend stream. What if I have rental properties? Well, I've got rent coming in, but I remember a time back in the mid 1980s when there were a lot of rental properties vacant in Texas because we went through a very difficult financial period. The renters moved out and the houses sat empty. So rental income isn't guaranteed. It's good and it offers tax advantages, but it's not guaranteed. One of the solutions we like are annuities, because if you create an annuity, a personal pension, and turn on the income, that's guaranteed income that'll pay out as long as you live. If you're married, we can set it up so it's joint income. So no matter who's alive to age 100, the stream of income continues to come in. And we're going to do a workshop on the power of income in several weeks. And we're going to show you how to use some of the savings you've got, how to multiply the value of those savings, whether they're after tax or pre-tax, doesn't matter. We're going to show you how to multiply the value of some of your money. And one of the reasons we focus in our practice on income is that over the last 15 years, as we've been building long-term financial models, showing our clients where they'll be 10, 15 years in the future, what we found is people with more guaranteed income in retirement have better financial outcomes. And this is something that repeats over and over again. We're happy to share with you and show you how this works. So we've talked about financial security. We've talked about defining it. And in our world, it really starts with creating a financial plan. And this is a window into your future. You know, it's one thing to say, I want to pay off my mortgage. I've got 500, 600,000 in savings. But until you build a financial model that looks at your expenses, your income sources, your assets in retirement, it's hard to know where you're going to be financially in the future, because taxes impact it, inflation can impact it, other expenses like medical expenses can come into play, long-term care events can occur. All of these impact your financial future. By building a financial model, we're going to talk about how that gives you insight into where you'll be 10, 15, maybe even 30 years into the future. And it gives you the assurance that your money's going to last as long as you do. The week after that, we're going to talk about the power of income and how you can multiply the value of some of your savings and support a safe, secure retirement. We're going to spend a full episode on maximizing Social Security, talking about the different strategies that exist to help you get maximum lifetime payout. We'll talk about ways to maximize the value of your retirement accounts. And finally, as I mentioned, we'll talk about 2 different strategies to tap home equity for people that are house rich but maybe savings poor, how to use your home as a vehicle to support and sustain a very successful lifestyle. So if you're interested, if you have questions about how to create your own financial security, call us today. This is where it starts. It's not our definition of financial security, it's yours. And we welcome people coming in, and we can talk about what it is that'll give you peace of mind in retirement. So with that, Tara, do we have any questions today? Anybody out there with a question? Well, if not, if you have questions, you can call us at 512-835-0963, and we look forward to chatting with you. If not, we'll see you next Tuesday when we'll talk about the process, how you go about creating a financial plan that gives you insights into where you're going to be financially down the road. Have a great week.